well, Lauren Woodman is actually going to be our moderator, but I wanted to just, thank you for the panel and thank Sophie in particular, because 3 years ago I started coming to the NetHope Summit and nobody knew what mobile money is. Today, and we have somebody from M-Pesa, we have somebody from Segovia, we have somebody from MasterCard, and we have Sophie who's been testing things. So it's super, super exciting. And I just wanted to say that this is something that touches all development programs. So whether you're running a health program, whether you're running emergency response, whatever you're doing, payments are universal. So we're super excited to have this panel. It's meant because it's Sophie's panel to be provocative. So I'm sure it will be. And we really want to challenge people to ask the questions of how do we get from digital payments to financial inclusion, and particularly what is the role of NGOs, what are the role of suppliers that you have here, and how do you make some of those decisions? So with that, I'll hand it off to Lauren.
Thank you. And guys, I apologize. I was coming from the NetHope board meeting, which it lasted exactly till 4 o'clock, and there's only so quickly that I can run. Thank you all for joining us up here on stage today. Let me do some quick introductions. I think everybody knows everybody, but I want to make sure I do this formally, and then I want to turn it over to some questions and get some feedback from partners and from the panelists. Make sense? First, let me introduce Sophie Romano from Oxfam. Sophie has been a very active NetHope member, and we're super glad to have her here. Claire Alexander from Vodafone, who's in charge of the M-Pesa effort. Andrew Meany from MasterCard, focused in the Middle East and Africa, also super active in this work. And then Satvik, I'm not going to get your last name right, I apologize. Satvik Sashai from Segovia, who's Chief Technology Officer at Segovia, working on mobile money. So let's start really quickly with the first question, and I'd ask for panelists to give me a 4 or 5 word answer. What's the biggest challenge in getting mobile money solutions into the field and into use at scale? Sophie, you want to start?
Yeah, education, cash, and collaboration.
I would say program management, who's going to do the on-the-ground work to ensure the scaling happens.
Distribution, execution.
All I've got left. What am I doing? It works. So the only thing left, I think, is culture change and behavioral change.
Distribution, education, program management, culture change. All right, let's start digging into some of these. Let's start with this question of education. Is it a question of education of merchants? Is it a question of education of NGOs? And when we think about education, does it require a higher level of technology literacy than we typically run into in the field? Sophie, you want to start?
All of the above. I think first of all, our clients need to be educated on financial literacy, numeracy, digital literacy also. There's an increasing usage of social media, but there's no knowledge of what the net is, really. So we need to do this. Working with all the partners, banks, MFIs, mobile network operators, service providers, on making them understanding who those clients are. How is it possible to bank someone who lives with less than $1.25 a day? And how can you actually run a business when you live with $1.25 a day? So I think it's a better understanding of the market, of the forces, and really making sure that we're empowering people, our clients, by giving them not only tools, but knowledge on how to use tools and how it can affect their lives.
Yeah, I would just point to a specific example. So one of the challenges we've seen with our MasterCard Aid solution, which is basically a card-based solution to distribute aid to beneficiaries after disasters, is when beneficiaries actually try to spend the funds, they don't remember the PIN because the PIN is the numeric values. So we did an experiment where we tried to use icons of everyday images like flowers, birds, and also a gesture pattern to see if we can replace these numeric pins. And so we did see some positive results for that. But I think that's one area where we still need to solve for.
I think from our side, we would sort of agree that a lot of education needs to be done. To be a bit provocative, I would say maybe as a service provider, this is what we would call marketing. We need to get it right. But I mean, it's clear that if we're going to get these sort of changes in behavior, for example, to make people move from cash to digital sort of transaction, we need to help them along the way. And this is why we invest so much in distribution, is not only to actually have these cash in and cash out points where you can sort of upload sort of money on your account or access it, but it's also simply to have a man or a woman who is at this outlet and who will help the customer to actually understand better how it works. And one last point has been that for us, using the phone that those customers already had, we try to make the experience as similar for mobile money as it was for the normal usage of text or voice. So they feel actually quite comfortable going through the same steps, and then gradually maybe we'll sort of do more. But you need to start with an environment that the customers are comfortable in. Customer needs to be at the core.
Let's just switch off. All right. I love the PIN example. We had a similar issue in Uganda where the PINs were so hard to remember that the provider we were working with just changed all the PINs to 1, 2, 3, 4 so that they could include it in their training materials. And you can imagine the issues that came up with that. And the way when we entered that program, one of the first things we did was we went to actually like choreograph paydays where we'd have a special day, we'd bring cash. Even though the money was being put onto the provider's account, we would still facilitate the actual delivery of cash. And I think that's what that shows, what that example taught us, is that you really have to focus on what the outcomes are for the population that you're serving and not focus on the technical outcome of getting financial services deployed or I'm a technology vendor for getting our technology used. And what that means in many cases is you might have a goal 2-3 years from now that there's this nice scenario where everyone is mobile banked, everyone is using a variety of services, but it might start out with a set of steps in that process being done manually, being done through coordination of the community, being done on paper, being done with physical cash, all on a roadmap to getting people to use the services that you want them to use.
You actually raise a really interesting question. A lot of times, the poor don't need just access to a bank account, but also to a wide variety of financial services. Should we think about taking a laddered approach, or should we think about trying to is there a core set of services we should start with, and how do we, from the perspective of trying to drive adoption, where do we start, and what are realistic expectations in the short term?
So I think a staged approach makes sense, but I think one of the mistakes that that we've probably made in some cases and others, when we talk about this, is the ladder isn't the same for every community and for every use case. That's a key point. There's, we often, I think technically you can rank services based on complexity. Exchanging money is one thing versus savings groups and so forth. But it turns out in certain cases, the first most important thing might be something that's more complex for another region. And so it really comes down to thinking through the ladder in context of the community.
That's helpful. Any other thoughts? Folks agree with that?
So yes and no, because the poor need financial services, and you need savings, you need credits, you need payment systems, and most of the time we work in our savings groups program. We work with 700,000 women who live in remote rural areas where there's no bank, there's no service, there's nothing. So they need to have financial services that are tailored to their needs, that they can repay, that they can trust, and that they can replicate. So I think it's interesting to link them to formal financial banks and services, MFIs or banks, but we need to start by education and by making sure they have a solid financial literacy or financial background, at least on the basics.
I would just add, I think we do support the laddered approach. I think, especially when we're responding to humanitarian disasters, if we're taking a card-based approach, that is an opportunity to anchor payments behavior in an underserved segment of the market. And also, as consumers are using maybe the NGO points-based cards, so if the cards are tied to points, then we can then move in the evolutionary cycle to currency-based cards. And then once merchants are accustomed to accepting the cards with mobile point-of-sale terminals, for example, then we see the behavior start to come. So I think we do support that laddered approach.
Yeah, I think same thing here, and I think ultimately there are indeed a number of financial services that can be accessed, and sort of people will want to access. It's about giving them choice and the tool to really exercise this choice. Clearly, there will be some segments which will be which will find it easier to move from sort of one instrument to the other, but at the end, it's providing choice.
Great, thanks. Choice sounds like it's important. Education sounds like it's important. One of the things that we also talked about was questions around distribution were big challenges. What challenges do we need to think about overcoming in terms of distribution that will get us to the point of large-scale consumer adoption? What are the 2 or 3 things that we need to think about there from a distribution perspective? Claire, you want to tackle that one?
Let me do that. So actually, it's funny because it was sort of yesterday and today I've discussed that point with a few of you, and some have said, we have a big problem. It's distribution and sort of liquidity, sort of management. And my answer was sort of very sort of direct. Again, we're saying, well, that's what we need to do, right? If as a user, you want to be paying sort of using sort of mobile money, we'll make sure that sort of we have this sort of distribution in places where sort of your beneficiaries or your staff are, if you're sort of paying staff. So this is a supply side sort of topic that sort of needs to be solved. So that's one of the key things when we talk about the financial inclusion, bringing digital financial services, is, in my view, being aware of who are the roles and responsibilities, so that yes, there are partnerships and it's great, but at the same time, if we're clear as to who needs to deliver what, I think we're going to go a great sort of length in solving some of these problems.
Does MasterCard see the same challenges from the distribution side?
Yeah, I would agree with that. I think I would add that if you look at the inflows to the unbanked, about 30% of them are government disbursements today. So then the question becomes, how do you attach yourself to those government disbursements? And again, just to give another specific example, in South Africa, working with the Social Security Administration, we've provided prepaid cards so that 23 million beneficiaries can receive their Social Security benefits on the card, and actually access the funds. They can cash out or they can use the funds at a regular retail environment. And so I feel like connecting and attaching electronic payments to existing government inflows is a way to get started in electronic payments. And oftentimes you can leverage the existing distribution network that may exist in the country.
That's interesting to think about government inflows as a way to start driving, reaching populations. I'm going to come right back to you in a second, Satwik.
Yeah, social safety nets.
Yeah, but Sophie, I was going to ask you, what do you think from a scale perspective we need to think about in terms of NGO adoption, based on your experience?
So it's a very interesting question, because I don't think NGOs are particularly well equipped to go to scale. We're not retailers, we're not mass marketers, so we really need the help of the private sector to make this happen. We have our own distribution channels through savings groups, through local partners, through networks of organizations, but that doesn't mean that we necessarily have a good marketing strategy. So I need help from the private sector to make this happen, very clearly.
Right, great point. And then from a technology perspective?
Yeah, I think there's, just to follow up on what Claire was saying in terms of clarifying roles and understanding what's supply side, what's demand side. I think that's important, but I think it's as important to clarify the exchange of information and the exchange of the communication that has to occur throughout an entire program and throughout an entire kind of deployment. So just saying, you handle liquidity, we handle registering the beneficiaries isn't as important as saying we will help you understand what types of liquidity needs we're going to need on a week-by-week basis, and then working together on solving those issues where, look, we just can't get liquidity to that region. Let's work together to figure out what to do. And then I think that's a kind of a specific example of the more general point to the question you asked about scale, of actually having patience. You know, I come from a technology background myself, and we talk a lot about how quickly we're disrupting things, and you know, we're gonna. Some of the engineers on my team have worked on places like Foursquare, where it's like, you know, I deployed the app and millions of people were using it, and teaching patience, you know, to ourselves and to everyone we're working with, I think is critical, and understanding that if we get this right in a small set of cases, focus on developing that right model across technology, across the implementation, across the interaction with the providers, we're going to scale in the long run. And this is the transition we've seen, I think, every industry that's gone through this type of evolution go through.
As we move to digital payment systems, questions around what we might otherwise think of in terms of consumer protection start to come up, right? And questions around transaction fees and transparency of transactions and how quickly we can get that information and privacy of information. Let's tackle some of those sort of independently or all at once. How do we, where education of consumers is a bit of a challenge, because when you use cash, there's no transaction fees. How do we start to provide information to consumers and beneficiaries and NGOs around what those things look like, and how do we put that in context of why digital money is, or digital payments are different than traditional cash payments?
We're going to stay all night. Just be prepared. We're getting whiskey in. We're going to stay all night. These are questions, you know, I spend days on. So consumer protection, we need the help of governments to have consumer laws that protect our clients around especially debt, around credit scoring. Creating algorithm to do credit scoring costs so much money, I can't even start thinking about it. Building credit histories, making sure that even the smallest transaction can contribute to your credit history. We were talking about the Syrian refugee crisis yesterday. How come you lose your credit worthiness as soon as you cross a border? What happens there? All the Syrian refugees had bank accounts. They cross the border, they can't even get to an ATM. So how can we design a portable KYC? How can we, there must be an app for this, right?
Yeah,
There must be an app for your credit worthiness. So again, I think it's the partnership between implementers, private sector, government, to tackle those questions and create the environment where we can have a thriving mobile payment system, where vendors also adopt mobile payments, because it's something that's desperately needed. You know, it's great to have mobile money on your phone, but what if you can't spend it? So
Claire, you were having a reaction, wants to weigh in here.
Yeah. No, I mean, so first, maybe if I may, I think the cash is not costless. And I think that what we look at, and as I've talked to some of you sort of during the last 2 days, you know, knowing your cost of cash, I think for sort of your organization is often sort of the starting point. Because yes, it's true that if I just take out sort of, you know, cash of my pocket, out of my pocket, you know, very straightforward. But maybe if I have to actually start queuing sort of to pay a bill, you know, then my, you know, the revenue I haven't made because I had to go and queue sort of, you know, start adding up. So there's already an element when we compare things, it's electronic transaction versus sort of completely different environment if you live only in the cash world. So I think that sort of would be a first point. Then when it comes to the, I think the question of consumer protection, I would say that certainly there's a number of things that sort of regulators need to keep an eye on, but there's sort of different also mechanisms that they can think of. And one of them is, for example, ensuring that there's sort of good competition in a given market, which will actually sort of give choice to customers to be able sort of to move if they don't sort of, if they are sort of unhappy. Mechanisms whereby, which is sort of what we do with our price list, making sure it's available in the stores where sort of customers come in to do cash in, cash out. And also, yeah, listening to the needs of those customers, because pricing information is just one aspect of the service we provide. So I think that's really important. At the end of the day, to be very candid, if customers do not trust us as providers, they'll walk away, and it's not good for us. So there are some incentives on the side of providers, in my view, which are as strong as potentially the sort of regulators coming in.
Mm-hmm. Andrew, I want to ask you a question, because I think this question of trust is really critical. In a lot of different environments where we are testing these digital payment systems, there are not particularly good data protection rules. And the nonprofit sector as a whole is not historically skilled in great data protection and data security. And so recognizing that we as a sector have a lot to learn around the security issues, and there's still a lot to learn around the privacy issues. How are providers thinking about building that trust with consumers and with the organizations that they're trying to serve?
Yeah, I think you just hit on one of the big challenges because, I mean, today as part of the MasterCard franchise, we already have very strong data protection, very rigorous standards that we have in our franchise rules. And as we extend to non-traditional actors, whether it be telcos getting payment bank licenses or other government entities becoming licensed MasterCard banks, these become very important questions. And the things that we take for granted in the developed world, having chargeback rights for fraud or bad service from the retailer, are things that are challenging to implement in developing markets. And I think, we do publish standards on how second factor authentication can be implemented, for example, at the time of transaction. And so we do try to make it as easy as possible for third parties to implement that technology in a scalable, standard way across markets. And increasingly, we're trying to make it easier for third-party providers to implement biometrics, which is more amenable to the developing markets where people can't remember the numeric PINs. And also facial recognition, voice recognition as well. So we are working with our industry partners to make standards for these elements available so that third-party local technology partners in each of the markets can implement according to those standards that are in compliance with our rules.
Mm-hmm.
If I can add something, we've been working with MasterCard actually on this issue of data and data privacy, and they've been immensely helpful to help us understand the problem. Because before we run to a solution, we really have to understand the problem, and there's a small working group on this topic. We do have a data policy at Oxfam through the Confederation. It's fantastic we have a policy, it's really hard to implement. So lots of things, are hard to implement, and digital payments, privacy protection is among those.
Yeah, I think these questions, especially for organizations for whom brand is really important, right, and is a means by which you establish trust with the communities in which you serve and the customers that you serve. Any potential threats to that have much further ramifications. I mean, ask Target, right? Much further ramifications than just the immediate breach. Let me ask this question. When we start to think about using digital payments in a given scenario, there are assessments that need to be done and market readiness that needs to be evaluated and consumer readiness that needs to be evaluated, but those things take time. Is there a way that we can speed up implementation? Are there things that we should be sharing in order to speed up implementation and to ease that path to digital payments?
I can start. I think one thing that we need to do a better job of is sharing not just best practices and not just kind of the tools we use to assess, but literally sharing the data across different regions, across not just the assessment phase, but the actual evaluation of how certain things have worked in certain regions. So when you go into a new region, you can assess the market, you can assess how many merchants you have, you can assess the literacy of the community, and then you can compare that to other regions and make a, actually be able to predict, how things are going to go.
Start small. Think about what your immediate needs are, and so maybe the community sort of, around you, some of the sort of closest sort of, entities you're working with. Sort of again, follow your payments that are cash today, and start with that, and then gradually sort of learn as well how your own organization reacts, what you can do well, what you may do differently, and whether there's a need for change or not, whether it's on your side, demand side, or supply side. I think might be a good way to go about.
Yeah, I agree. I mean, I think there's no way to get around the market assessment. So I think in the context of humanitarian relief, best to do the assessments beforehand and identify the global and local players that have the right capabilities. And so if you do that in advance as opposed to doing it on an ad hoc basis, you're much better positioned to respond.
Yeah, data, totally agree. We poll the groups we work with, and we share the data with the providers in Senegal, for instance, so that we can design products that are really adapted to their needs and to their capacity, and go slow. Sadly, it's going to take a while.
Maybe actually, so in addition to starting small and indeed maybe going slowly, go with those who are most enthusiastic.
Yeah.
Because if you get sort of, early adopters who'd be more motivated, they'll go over the hurdles that maybe, or maybe they just go direct to usage. And then once you have those people on board, sort of again among, your staff, your beneficiaries, the people you're paying, then suddenly in terms of, spreading the word, sometime maybe even sort of, throughout their own network, whether it's a digital network or not, they will actually take that role. If this solution, sort of the mobile money solution in this case, or the other digital financial service, has actually helped them to solve some needs, they'll be the first one to tell others, well, you're like me, you're facing this or that, use this service.
Mm-hmm. Andrew, you said something that was interesting that I want to follow up on in terms of identifying local and global providers. There are a variety of providers out there. There are a variety of approaches. And I'd love, actually, everyone's opinion. Do we need to start thinking about setting market, or should we start thinking about setting norms or standards or common approaches that would eliminate some of the differentiations on core functionality in terms of mobile payment systems?
Yeah, I would say absolutely. I think that's a good way to leverage best practices to make them more scalable across markets. So I think that would be our position, that we would support having the common standards applied. And if you look at the relevant product we have in the space, MasterCard Aid, I mean, it's really built around the premise of having common standards around what, when a beneficiary uses their card at a merchant with points applied to the prepaid card, what transaction details need to be stored at the merchant terminal, how is the transaction data transmitted from the merchant terminal to the central data server, and how can this work in environments where you don't have data connectivity, and then it's done in batch files on a periodic basis. So having standardized rules on how this works makes it more scalable.
I'm thinking whether I agree or I disagree, actually. No, I mean, I think there's no question that in any, I would say, environment which is technology-based, you need to have standards, right? I think there's no question about that. So that, the different systems sort of becomes interoperable, and that we reduce the cost, we reduce the friction. Now, having said that, I think that equally what you want to ensure is that on that layer, you are able to build services, solution, proposition, whatever you want to call them, which are going to be really differentiated so that you can cater for the different needs, but also within a simple segment, you provide to the men and women choice as to what they want to use now or later, and maybe they'll want to use different solutions. So I think we need to find the right balance between the two.
Yeah, actually, it's hard to argue against standards, but it would be a boring panel if we all agreed. So I'll take the contrarian approach, which is I don't think it's a question of should we have standards, it's a question of when. And I think we're too early in this phase. I think we need to understand what we need to get things working. We need to have enough examples. We all talk about M-Pesa as the one that worked. Let's have a couple more. And then let's figure out, what the standards are based on what's worked in the market.
Yeah, and from my point of view, I don't understand a thing you're saying, right? So I need it to be simple, and I need it to be scalable, and to be in a local language, and it has to be foolproof. It cannot be jargony. Whatever you're going to sell me, it cannot be. It has to be very simple.
Right. So, to the point yesterday about you need simplicity to mask all the complexity behind it. You're absolutely right. Like, it means just to be really, really simple. So Sophie just said that she needed something that would scale, that would be in a local language, that would be, you know, really robust and would serve lots of different markets for lots of different things. So there's the need. We've heard in lots of these conversations that mobile money will be transformative and totally disrupt the market and potentially, you know, open up a whole new realm of opportunity. And we've certainly heard a lot of folks place great faith in financial inclusion as a really critical to changing the paradigm that many of these communities are facing. And then what I've heard from everybody else on the panel is be patient, go slow, start small, be careful as we sort of think about rolling these things out. And there's somewhat of a tension, right? Because in order to be transformative, you're going to have to get to scale. In order to get to scale, though, you got to get it right, which probably means start small and think about it. So as organizations are thinking about how they implement these types of systems, how do they weigh that balance? And how do they evaluate when it's time to move forward and push harder? And maybe when should they slow down and evaluate sort of whether or not a program is working effectively or not? Sophie, based on what you've seen, I mean, you have a large program running. How do you think about those balances?
It's really hard to strike because there's a real demand and there's a real impatience from our client asking us to deliver, us collectively, all of us on the panel. And these solutions are not simple to implement. So we have to do it carefully because in my case, we use savings groups and those groups build trust because they save 25 cents at a time together every week. And we cannot put that trust in peril. So we have to be cautious to design the products that are going to complement what they do, that are going to mirror what they already do on a weekly basis, and that's going to really bring them transformative change. Not just an output level, you know, we've rolled out to X millions of people, we have billions of transactions. It doesn't really matter. Because if it's not helping them create wealth, create jobs, go to the market, send children to the education, to school, create long-term savings products. We can create pension funds on mobile phones. Let's do it. But it's complicated because the risk, as you identified, of the brand risk or the risk of destroying an asset that's very valuable is real.
I'm not sure how intention those things are in the sense that I'm not sure you could get to the disruptive scale, transformative scale without getting it right. I think where it becomes hard is like you said, in deciding when to move forward. And I think a trap we fall into is in actually trying to use data to, some can argue against data now, to assess when we're ready. So looking at things like, you know, how many people were affected, how many accounts did we create, and so forth. I actually think if you look at some of the best, you know, from the technology sector, you look at some of the biggest scale technology platforms that are out there, Facebook, the iPhone, and so forth, they all put severe restrictions on the markets they were serving and the features that they were offering in the beginning. Facebook was only for colleges, it was only for, you know, this, that, and the other thing. Until they got it right, they were able to change behavior. And the way they assessed that was through qualitative assessment. It was through, I mean, they were very personality driven, but it was through individuals saying, yeah, this feels right to me. I think I don't have an answer for how to do that with the donor community that, you know, is demanding more quantitative signs of success. But I think, you know, that's something that I think we have to back off from using data to try to assess a stepwise progression.
Maybe let me qualify sort of the statement when I say, you know, so go slow and, you know, start sort of simple. So I think, yes, sort of do that, but to a point. Sort of, you know, be clear as to what you need to learn, what are the things that you want to test, so give yourself time for that. But once you've actually ticked that box, then go super fast. And that's indeed in a way sort of the flip side is that, yes, you can afford to take a bit longer to start, but that's because you're going to accelerate afterwards. And then the other thing from a maybe organization point of view is that all this disruption, this change is only going to happen with some leadership. So whether that's sort of from the top, whether it's sort of, you know, throughout the organization, but you need to have that drive. And I think, yes, it's a change for the organization, for the beneficiaries or the staff that work for you, but sort of you need that leadership.
Yeah, I think, you know, based on the experience we've had in Brazil and Egypt, where we've tried to build mobile ecosystems from the ground up, is you really do need to take the stepwise approach that was referenced earlier. You know, and again, getting back to my point, attach yourself to established inflows in the market, like whether it's government salaries or government benefits as a first step, for example, instead of trying to do everything at once, because that never really works very well. So I think, you know, that's certainly been our experience, so I would agree with that sentiment.
As we think about, I want to, from an M-Pesa perspective and from a MasterCard perspective, you guys have both had efforts running in lots of different countries. Are there general market differences that you would point to, or in terms of more generic guidance, in knowing what you know about market differences, what things should NGOs be looking at in terms of things that we might not obviously think about in terms of our market assessments based on things you found that differ?
So what we've seen, and I think sort of should apply sort of for the sort of, you know, NGOs as sort of, you know, payer as well, is that there are indeed different needs. There are sort of different sort of structures in the different markets. Mobile money has worked very well and is working very well in East Africa, for example, and we both in Kenya and Tanzania, because there's lots of sort of intra-country migration. So there's lots of long-distance payment that you need to do. Great. Now, as we've sort of rolled out in Mozambique, for example, not that sort of further down south, we've realized there's less of that. So it's about finding, again, the pain points that the customers for us or beneficiaries maybe sort of have in your case, and thinking about what's sort of unique to this market, what is the hardest thing that those people sort of go through, and how can I help them sort of do that? So the tools are the same, which is market assessment, or for us, you know, insights, focus group, and I think same tools, but maybe with a slightly different angle, and really putting the customer and the needs at the core. What we found is if you're really good at identifying those needs, then, you know, the marketing or the education program you do is still important, but might be less necessary because the needs are so strong. So I think that's the approach we would take.
Yeah, I think I agree with that. And I think in any market screening we do, the first two things that immediately come to mind is there a scaled incumbent mobile money program or programs already in the market? And to what extent is there an existing agent network? Because those are really the precursors to us being able to make a play. So I think those are really the two critical market features we look at when first analyzing a market.
Well, I'll make a plea to both of you on behalf of the NetHope membership. Both of you, I think, both of your companies in particular, but both of you probably in some detail, look at consumer preferences in the markets in which you serve. And there's probably a level of detail in that speaks to general market trends that, frankly, nonprofits will never have insight to. So I would simply make the plea that as our members start moving into new markets, it would be very interesting to start to understand some of those consumer differences market by market, because their beneficiaries are going to have those very same needs in terms of serving them well. So I'll make a request for all of your customer data on behalf of all of our members. And if you could just turn that over, Shelley will be happy to throw it up on Box, and we'll be in great shape. But there's probably a better way for us to get to that data, but we'll just kind of tee it up. We're almost out of time, but I want to give everybody the opportunity for one or two closing comments. And thank you for your participation. So actually, Sophie, why don't we start with you and let you start off our last round of comments.
So I love digital payments and digital technology, and I think it's a vastly under-delivered promise, because we can do so many things. We can really change the lives of millions of men and women. It's really, so it's a simple premise, it's a complex implementation. I also wanted to think about a little bit more about the cash issue. We have those banknotes floating around, and they're a real obstacle. So can we also start thinking about having real e-currencies, right? And rethink the Bitcoin model that's having a second life around. So I think there's a lot of things that need to be improved, changed, new technology that needs to be introduced. But the NGOs are ready to partner. So let's do it together.
Yeah, I would echo the sentiments around partnership. I think if there's any one thing we can all agree upon, it's that having collaboration across the ecosystem is absolutely essential. So MasterCard can't do it alone. It takes an entire ecosystem to get this up and running. And I think it's really at the heart of our company's strategy. Displacement of cash. 85% of today's retail transactions are in cash or check. And that's really the biggest opportunity that we see as a company. And we know that to tackle that opportunity, we're going to have to work with entities from across all sectors.
So my message would be try it, and try it not from a technology point of view, because again, the technology should be hidden. You shouldn't sort of feel it. You shouldn't see it, hopefully, which means that probably all of you mostly sort of working in the technology sector are probably not the people who are going to be mostly interested, but when you go home, talk to your controller, your treasurer, your financial officers, because ask them what's the cost of cash, and they might tell you, actually, I'm not sure. But what you get them thinking, then they might actually ask you more questions about what you've learned about digital financial services during those days.
I think digital financial services actually touch on a number of very core issues that affect the populations we're dealing with. They affect identity. They affect the roles that husbands and wives play in the community. They affect the types of services that can be delivered, how you do planning of your own family, of your own village. And so when we think about financial services, we often talk about it from the technical perspective or the kind of commercial perspective. But I think there's an opportunity here, and I think the NetHope membership and the NGOs in this space actually understand the various populations that we're serving at a level of detail that no one else does. And so you really have the opportunity to to envision a world for the future. What are the changes in the communities that you're serving, and how can the financial services be a tool to affect all the kind of more meaningful, deeper changes that you'd want to see in the communities that you're serving?
So we need to go slow in order to go fast. We need to make sure that we're sharing data. We need to make sure that we're serving those populations well, and to leverage the right technology and tools and partners in order to have an impact. Thank you guys very much. This has been really insightful and really very helpful for you to share your experience. And I would encourage all of you that are interested in digital payments and mobile money and financial innovations in this space to spend some time talking with these folks and with Shelley, and to sort of weigh in, because there's a lot of work that's quite exciting in this particular space. And I think all of us share an optimism that this could potentially be really revolutionary in the way that we include individuals around the world and their communities and give them greater opportunity. But there's definitely some work for all of us to do in order to make that happen. So again, thank you all very much. It's been great having you up here.